Let's move on and let's now discuss what's the impact of crude. We just told you the impact on steel, but let's also try and understand how the life of ONGC gets impacted with all the disruptions that are going around with crude. Alka Mittal, the CMD, joins us on the show right now. Ms. Mittal, great to have you on the show. First things first, oil prices have been so volatile of late owing to Russia and Ukraine. But even before that, the demand-supply mismatch was prevalent in the global oil market, which had kept oil prices higher. So from a long-term point of view, where do you see oil prices headed?
You're right, oil prices have been fairly volatile since last 2 years, while on the one hand, the world witnessed negative oil prices in 2020. We are seeing historic high prices today. The demand supply mismatch that we are seeing today has also to be seen in light of the production cuts by the OPEC and the drastic cuts in capex made by global oil and gas companies due to the COVID pandemic. The recent geopolitical events have only increased the volatility and added to the price rise. Oil prices, I have always seen, have been a function of demand and supply and geopolitics, and therefore it is difficult to predict them. But in spite of the recent volatility, what we do expect the prices to stabilize on long-term basis as supply situation, I feel, will improve. I believe that the long-term prices should eventually settle in the range of 60 to 80 US dollars. That seems most logical to me.
Right. So is the 60 to 80 dollars per barrel price range suggested by you, and you think is this sustainable for ONGC and still leave some profit on the table for you guys?
Definitely. In fact, that is the way we are planning our projects, our capex investment in the projects, and the projects which we are taking for further go ahead from the board. We normally try to keep it in that range and then look at the IRR and the NPV in the times to come. So that is the way we work, and that is the way numbers which we are looking at, because sustainability will come with stability only, and that is what we understand as an organization.
So due to geopolitical reasons, suddenly a large supplier is off the market. Are there expectations that US and OPEC may increase supply? Does this kind of uncertainty make it difficult to draw the near-term plans? What kind of realizations do you think one should expect then?
At the moment, what we are looking at from the price trend and the kind of geopolitical situation that is evolving, we are looking at projects which will be taking off in the near future and in, I would say, the midterm, because our action plan is for 2024-25, where we are looking at a much better production level in the times to come. And with that in view, we are looking at our activities and our the kind of gearing up which is required as far as our business action plan is concerned. Our projects are taking shape now with the pandemic a little behind us, not totally behind though. We are keeping our fingers crossed and on that. But yes, definitely we'll be looking at better numbers as far as production is concerned. And definitely once the oil prices have stabilized, our projects, our performance, our future contribution towards the energy sufficiency in the country will be much more clear. And I'm looking at that scenario by the end of this year, if not a little before.
To Russia while the oil fields, what are the plans on these investments? How do you plan to sell oil there? What happens to your Russian business?
Actually, you're right. It is too early to say. The entire world was taken by surprise with this development, and we too. And we are putting our heads together to look at how we will be able to, what kind of decisions we will be able to take in this scenario. And lack of clarity is what is holding us back from conveying anything positive or anything which could make everyone clear about what is ONGC's stand on this. So I think we need a few weeks, maybe 6 to 8 weeks, when things stabilize and we are able to look at the future scenario as far as our Russia operations are concerned. Our team OVL is working on it, and we are providing all backup to them as far as deliberations, thinking, and once situation evolves, we will be able to comment on that, I would say.
Good morning, Ms. Mittal. Just heading back home now, on 1st of April, India will get its new domestic gas price. There is a formula. As per that formula, it's looking like the price effective 1st April will be around $66.5 per unit. Is this going to be above the cost of production? Last time round, the gas price was below your cost of production.
Definitely. You have voiced our major concern now when we talk about the gas pricing, especially for the domestic market, where we are the domestic price mechanism, which is in vogue since 2017. The gas prices are for the nomination fields, for the fields which were taken by ONGC during the nomination regime, I would say, is based on weighted average of 4 major international benchmarks. These are the 4 hubs: Henry Hub, NBP, Alberta, and Russia. The price of all these benchmarks have seen major uptick since last 1 year, and therefore the domestic gas price which we are we have been given is much lower, and our versus the kind of input that goes into this kind of production. And we are expecting to increase in line with the mechanism which is evolved since 2014. So our natural gas production cost as of now, as I was mentioning, is $3 to $4 per Mmbtu, and we have been selling the gas at much below the cost of production since last 3 years. So increase in gas prices will help us to cover these losses. But more importantly, it will also help us in bringing about new fields into production, new projects which have remained unviable due to the prevailing prices. And this will be a big source of relief to us, that we'll be able to contribute better towards the gas production levels in the country.
So, Ms. Mittal, as we go from this sharp jump, $3 to $4 to $6 to $6.5, when companies like ONGC are still making up the cost of production of gas, how do you see this panning out when we are talking at a time when crude is on the boil, gas prices globally are going up? That seems to and is likely to be the trend for the rest of the financial year and the new financial year. Are you expecting any kind of cap from the government? The government has always reserved that right to maintain inflation when it's talked about freedom of fuel prices as well as natural gas prices.
Actually, the formula for determining the domestic gas price has been in vogue since 2014, as I mentioned earlier, and it has seen many cycles since then, including abnormally low prices. We do hope that the same formula will be continued with to ensure continuity in policies, because it brings lots of stability to the decision-making process. As of now, we are not aware of any kind of proposed cap or alterations in the formula, and therefore we do not expect any major changes in the pricing regime as such. I would also like to add here that in order to achieve the government's vision to increase the share of natural gas in the energy basket from present 6% to 15% by 2030, the domestic gas production will need to be increased. This in turn will require that market-driven competitive prices are provided to domestic gas producers. The abnormally low prices of natural gas has affected the development of some natural gas fields, and remunerative prices can certainly help in increasing the natural gas production in the country. It's not about ONGC, it's about the country in general,
Sure. Alka, so also share with us what your capital expenditure plan is for FY23.
So just like we are looking at scaling up our activities, the capex definitely would be going up as well. Unlike most of the oil and gas majors and large independents who have drastically cut capital outlays in the face of drop in oil prices, ONGC has continued to spend the same capex as we used to during the pre-COVID times. And as a result of that, historically our capex spending, which is about rupees 30,000 crores, with about quarter of capex in exploratory expenditure and the balance in development activities, R&D and integration projects, there were some issues in capex spending due to the impact of lockdown during the pandemic, but not only within the country but outside as well. However, going forward, we expect that the capex spending should reach the pre-COVID level in 2023, which I shared would be around rupees 30,000 crores, and I am fairly confident that that will be incurred.
Right. Is ONGC also looking to induct a foreign partner in any of its field to enhance production, and any plans that may have already been finalized on this front?
Talks are on. ONGC has a long history of partnerships, and we are open to partnerships and collaborations, both for existing fields as well as development of new fields and basins. As a part of this exercise, we have reached out to global majors as well as domestic players. We have recently invited bids for 43 oil and gas fields in 11 online contract areas, with total in place oil equivalent volume of around 160 Mmbtu. And to interested companies through international competitive bidding route, we are going across, and these contract areas are spread across the states of Gujarat, Assam, Tamil Nadu and Andhra Pradesh, where our major on land activities are on. And on international front also, we are looking at new technologies and collaborations, and I hope we shall be able to give shape to some of the very fruitful partnerships which we are looking at building upon.
So, Ms. Mittal, how can we let you go without then asking you what's been the response to all of these bids?
The response for the first round was fairly cautious but positive, I would say. And the second round, we are looking at making it more meaningful for the partners, and that's why we are looking at a response which would be better. And let's see, the time will tell us how these ideas are taken up, how these initiatives are taken up by those who are willing to be our partners. We are fairly hopeful on that though.
Okay, so let's watch and see how this pans out. This is a big exclusive, ladies and gentlemen. The chairperson and managing director, the big boss of ONGC, only on your channel, Ms. Alka Mittal, candid about oil being on the boil, what it's meaning for upstream companies, usually seen as good news, and of course, the new gas price that will come into effect from 1st of April.